Dirty dealings, corporate battles, consumer woes. This is Evening 5. Public Bank, Malaysia's third-largest bank by assets, is acquiring a 44.15% stake in insurer LPI Capital for 1.72 billion in cash from the family of the late Tan Sri Teh Hong Piao. This as Consolidated Teh Holdings and his estate, the largest shareholders of Public Bank, will undertake a restricted offer for sale of shares in the bank to eligible employees, investors and directors. The restricted offer for sale will see the Teh family trimming its shareholdings in Public Bank to 10%. Consolidated Teh is the private vehicle of the Teh family. Teh, who passed away in 2022, founded both Public Bank and LPI. His estate holds a 1.41% direct stake in LPI and another 42.74% through Consolidated Teh. On Thursday, Public Bank inked a conditional sale and purchase agreement with Consolidated Teh and the estate for the proposed acquisition of 175.9 million shares in LPI. At RM9.80 per share, the acquisition price is a discount of 25% to LPI's last price of RM13 before the stock was suspended. The price tag values LPI at 1.78 times its book value and 12.41 times its 2023 earnings. On the discount, the owner Teh Li Xian said the valuation is in line with those of comparable companies in the global insurance industry. Li Xian, who is the youngest daughter of the late founder, explained that the price was negotiated on a willing buyer, willing seller basis. She added that money is not a factor, but rather it was more about realigning its interests. Upon completion, Public Bank will emerge as LPI's largest shareholder. The bank is also obliged to make a mandatory general offer at RM9.80 per share to buy out all the LPI shares that it does not own. Public Bank intends to maintain LPI's listing status. According to MD and CEO Tan Sri Dr. Teh Alek, this proposed acquisition is in line with the group's plan to expand beyond organic growth, but to do so through strategic acquisition. He says it represents unique opportunities for Public Bank to move towards a universal banking model to offer comprehensive and diverse products and services. Meanwhile, Li Shan said that the process of trimming the family's stake will span a 5-year period and will be in compliance with the Financial Services Act. Details of the restricted offer for sale will be announced later. Currently, the estate holds a 23.41% stake in the bank, where 22.77% is held via Consolidated Teh. Top Glove Corporation saw its net losses for its fourth quarter narrow sharply as sales surged and it booked gains from land sales. Net losses for the quarter came in at 3.57 million ringgit compared with a net loss of 461.7 million reported in the previous year's corresponding quarter. The glove maker had also booked 39.35 million in gain on disposal of property, plant and equipment. Revenue jumped 75% year-on-year to 835.3 million from 476.1 million last year. Top Glove said that it had raised its selling prices in response to the depreciation of the greenback, though the effect would only be seen from November 2024 onwards. Earnings before interest, taxes, depreciation and amortization was positive on a full-year basis, while volume growth remained healthy, said Managing Director Lim Chuang Guan. Lim added that these are strong indicators of market resurgence and that the group is well positioned to ride the recovery wave. As such, the world's largest glove maker by capacity said it will resume the installation of advanced production lines at its newer factories, a process that had temporarily been halted due to oversupply. Top Glove and other Malaysian glove makers are bracing for a surge in orders, particularly from the US, after more foreign manufacturers' gloves ended up on the import alert list of the Food and Drug Administration. Further, the US also previously announced higher tariffs on medical gloves made in China beginning 2025. For FY 2024, Top Glove's net loss shrank to 61.8 million from 925.2 million in FY 2023, again partly boosted by the 96.74 million gain on disposal of properties. Revenue for the full year grew 12% year-on-year to 2.52 billion. The company did not declare a dividend. Sunway's unit Sunway Developments, together with Hoi Hub Realty, have been awarded a parcel of land by Singapore's Housing and Development Board. This was after the duo's successful joint tender for the land. The leasehold land, measuring 23,512 square meters at Tampines, will be used for a mixed commercial and residential development at 668.28 million Sing dollars or 2.19 billion ringgit. Hoi Hub and SDPL will incorporate a joint venture company in which Hoi Hub or its nominee companies and SDPL shall have equity interest in the proportion of 65-35 at a later date to undertake the development of the land. Hoi Hub is a company incorporated in Singapore, with its principal activity being real estate development. The completion period for the proposed project shall be in 84 months, commencing from October 10, 2024. It is expected to contribute positively to the group's earnings from FY 2026 onwards. Sunway's share price closed unchanged at 4 ringgit 27 today, bringing the group a market value of 24.47 billion ringgit. Norway's sovereign wealth fund has ended observation of Supermax Corp 2 years after placing the glovemaker under watch over allegations that the company contributed to human rights violations, Reuters reports. The trillion-dollar wealth fund said in a statement on Wednesday that it had also ended the observation of Southern Co and BHP Group for their coal usage and production. Norges Bank, guided by its Council on Ethics, may exclude companies from the fund's investment universe or place them under observation based on factors including human rights abuses, weapon sales, and coal-related activities. In a statement, Norges Bank Investment Management said that the company has, during the time of observation, reported that it has implemented several measures to improve conditions. It added that the risk that the company is contributing to human rights violations is no longer considered unacceptable. The decision comes a year after the US lifted a ban on Supermax, allowing it to resume sales. The company's imports were barred from the US in October 2021 over alleged forced labor practices. The National Heart Institute, or IJN, is seeking a 10 to 40% increase in the fees it charges patients outsourced by the Ministry of Health, citing rising costs. Its CEO, Professor Datuk Seri Dr. Mohamed Ezani Mat Taib, noted that the fee structure was set over 20 years ago in 2003. Ezani, who took over the top post at IJN on September 1st, said the Heart Centre will not be hiking its charges to match those of private hospitals. He cited as an example a simple bypass surgery that can cost about 110 to 120,000 ringgit in private hospitals. In IJN, the procedure can cost about 30,000 ringgit. He also said IJN is discussing with MOH about having a proper discharge methodology or system to ensure that MOH-funded patients still needing cardiology care are not missed out and discharged prematurely into the general government hospitals. He said this in response to the issue of pensioners funded by MOH complaining that they had been discharged from IJN despite still needing treatment due to the government's cost-cutting measure. The MOH, however, clarified in February when the issue cropped up that patients are only discharged from IJN to government hospitals when their conditions are stable, saying the approach maximizes cost effectiveness and allows about 4,000 new patients to be referred to IJN annually. Ezani also shared that the number of patients IJN serves has been plateauing in recent years as it has maxed out its capacity.